It is almost turkey time. It's almost time to kick back, relax, and enjoy some delicious food, but we have a few important trading sessions to get through before we actually can get to the holiday season. Now, most years, this portion of the season is pretty boring. Low liquidity, low volume, not really anything too exceptional going on. However, this year is going to be completely different because both the equity and the crypto market is teetering on the edge, as in we could easily get that beautiful, bullish V-shaped recovery and everyone starts buying this dip, or we can actually break some of these recent lows and truly capitulate. In this video, I'll be breaking down everything you should be paying attention to in this upcoming shortened trading week. All the major macroeconomic events, the seasonality, the earnings, and I'll be doing my best to kind of lay out the groundwork for what the bull case would be and also the bear case, and then make sure you stick around into the end because I'll be giving you my own thoughts and opinions. But before we get to that, if you enjoyed these type of market breakdowns, don't forget to like, subscribe, share this video with your grandma. With that being said, let's roll the tape. To get a better idea of where we might be going, you should have a pretty solid concept of where we're coming from. On Friday, we did have a pretty solid relief, but overall, it was a very bloody week. Dow closes about 500 points higher in big market rebound after a steep sell-off this week. So the S&P 500, the barometer for the overall market, yes, lower highs, lower lows. We now have multiple closes below the 50 EMA, and obviously the cloud is starting to go from bullish momentum to bearish momentum. But with this big sell-off on Thursday, the gap up from Nvidia, the jobs numbers, and Walmart couldn't hold, we sold, and this is that little bit of a rebound on Friday. And of course, the major aspect of this video will be, okay, do we see it actually recovering or not? But to give you, I guess, a bit more context here, pretty much a similar situation in the NASDAQ, lower highs, lower lows, below the 50 EMA, the cloud is going from bullish to bearish, and you could even see a pretty noteworthy spike in volatility. The VIX, the measure of the volatility for the S&P 500, it did take a hit, but overall, we're still pretty elevated from what we've seen for that most of the, May up until October, the market just climbing and climbing and climbing. Well, when that happened, vol was pretty much doing nothing. And one thing that everyone's still talking about is the fact that crypto is getting smacked. Now, from this all-time high to this point, down roughly 33%. As I'm filming this, we had a little bit of a tiny rebound, but a lot of people are saying, is this just kind of like a little bit of a fake out, or are we going to get a bounce maybe back up to 95 or 100? Well, that's what we should talk about. And the best way for me to really structure this is let's start with seasonality, as we always do. I do want to remind you the final portion of November does historically favor the bulls. You could see that by the time you get about 2/3 of the way through the month, the normal seasonality, and this isn't a guarantee, is pretty bullish until about the first week of December, where it gets a little choppy, and then it's bullish again until pretty much halfway through January. Now, this is based on 20 years worth of information. Looking at Edgeful over the past 5 years, you can see that, yeah, November still pretty bullish, and the 2 weeks we're about to head into, the final week of November and the first week of December, they do favor the bulls. Once again, not the end all be all, but just to give you an idea that the fact that the bulls do have the wind at their back supporting them. Now, this week, before we get into the holiday, we're getting retail sales, we're getting consumer confidence, we're getting some inflation PPI, we're getting durable goods, we're getting GDP, we're getting more inflation numbers. So pretty much Tuesday and Wednesday of this week, heading into that holiday on Thursday, the market is closed. There's gonna be a lot of macroeconomic data drops. Obviously, binary events, whether good or bad, please pay attention to that. And then Friday, it is a half day. I want to let you know that the market is technically open. It closes at 1 p.m., but most people are not really actively trading on those days. So yes, these are all the scheduled data drops that you got to be paying attention to. But as I was prepping for this video, I realized that we might be getting some drama on the global political sphere. Trump says Ukraine peace plan isn't final after criticism it favors Russia. So there's a good chance, like I said, that there's going to be political-esque drama, and it might be really hitting the main stage this upcoming week. The proposal's detractors are trying to convince the White House that the 28-point plan should be a starting point for Russia-Ukraine talks. More specifically, people aren't the most happy. US, Ukraine, and European officials hold Geneva talks on Trump plan to end the war. Officials from Europe and the United States and Ukraine gathered in Geneva today, Sunday, to discuss a draft plan presented by Washington to end the Ukraine war after Ukraine and its allies voiced alarms over what they saw as major concessions to the aggressor, Russia. On Friday, US President Donald Trump said the Ukrainian President Zelensky had until Thursday to approve the 28-point plan, which calls on Ukraine to cede territory, accept limits on the military, and renounce ambitions to join NATO. Since the plan was announced, there's been a considerable confusion about who was involved in drawing it up. European allies said they had not been consulting, and on a larger level, obviously with what I just read, you can tell that Ukraine probably isn't going to be the most stoked. As of the moment that I'm filming this video, I think this whole situation will more likely than not break in a negative direction than a positive direction. This just came out from President Trump. President Trump says Ukraine's leadership has expressed quote unquote zero gratitude for his peace deal efforts. So right now it just doesn't really seem, I know I'm reading tea leaves here, but doesn't seem the best. So just wanted to put that on your radar. Obviously pay attention to any development there. With respect to earnings, technically earnings season is still going, but there's not that many more companies to report. You might care about Zoom after the market closes on Monday. On Tuesday, you have Alibaba, you have Neo, you have Dell, and then on Wednesday, you have John Deere. Those are the ones that I'm going to be paying attention to, but in reality, earnings season is pretty much over. If you ask me, I think the major thing influencing do we recover or do we fall from here really isn't even going to be happening this upcoming week. I'm really looking a bit after that, and I'm talking about December 10th when we're going to have the next FOMC meeting. According to the Fed Watch tool, there is a 71% chance that we do get a 25 bips rate cut, but the crazy thing is how much the odds of this rate cut have been bouncing back and forth. Now, it all kind of got a little hairy, a little hectic when John Williams, the New York Fed president, this past week was saying, yeah, I think we're going to get this rate cut, and you can actually see kind of right where he started talking, because before that, there was more likely than not that we're not getting a 25 bips rate cut, and then from there, it seems like the Fed and really the voting FOMC members cannot really come to a consensus. We can already tell that there was a little bit of just, I don't know, a split, if you will, in the last FOMC meeting minutes. But if you look at the recent commentary over the past week, the past 2 weeks, there's a lot of different opinions. This is by no means going to be a unanimous vote. At this moment, it does look more likely than not that we will get a 25 bips rate cut, but I just want to bring this to your attention that we've been all over the map, and it's not just Kohrs, we're seeing the exact same thing on Polymarket. So it seems as if the market, and not just Kohrs and Polymarket, but I'm saying the actual like economic system behind this is going to be really impacted by what this decision is, and you could tell that it is switching back and forth like it is nothing. So this is going to be the major thing for me to watch. Unfortunately, that's going to be in early December, so we're going to have a little bit of time, and of course in between then, yes, pay attention to the jobs and the inflation numbers, because that's also going to have an impact here. But I would argue this is going to be the major event and really the market's response to it that decides what's the next big leg in the overall market. Until we get those results, and obviously more importantly the market's reaction, we have to deal with what we have right now. And all I can tell you is, looking at this market, we have lower highs, we have lower lows, we've closed 1, 2, 3, 4, 5 days below the 50 EMA. The cloud is going from bullish momentum to bearish momentum. This is a clear trend switch. Obviously, ever since roughly late April, early May, it's been nothing but higher highs and higher lows. This, I know a lot of people, you're probably watching this thinking, why are we pulling back? This seems crazy. From a math standpoint, from a statistics standpoint, I think it's actually a better question of why did we rip so much without a single pullback, rather than why are we getting a little bit of a pullback right now. When in doubt, zoom out and realize we've only given a bit back, and of course it can keep going, or we could obviously just bottom here and bounce off, kind of give this like double bottom situation from what we saw in early October. That's possible, but I want to let you know that right now, at least from late October until this moment, the trend has shifted. That doesn't mean it's going to keep going, or maybe it does, but what I'll personally be looking for is really, I want to see this big bar right here, Thursday, November the 20th. I either want to see us push and hold above that, or break below and keep going in that direction. I'm using this day's range as a pretty important indicator. Before that, if we get and hold above 6,700, I would say that's a big win for the bulls. That's kind of more of my risk on situation. However, if we start to break around 6,500, 6,550, especially if we're getting closes below that, I would say once again in the short term, that means that the bear camp has a bit more strength. If you wanted, you could generically apply that logic to pretty much whatever's going on in the NASDAQ. They're not exactly moving in lockstep, but it's close enough. And when it comes to the world of crypto, well, we're seeing a little bit of a relief, but overall still lower highs, lower low. The momentum is bearish, so I'm not necessarily looking to dip by yet. If anything, I just want to see where that next high is, because it's most likely going to be a lower high, and then from there it's going to be telling to see what the next swing low is. Are we generically going with this trend, or are the dip buyers actually stepping in? At the moment that I'm filming this video, I would argue as a short-term swing swing trader going with the trend, well, it is a bearish trend. And until proven otherwise, I'm going to keep taking a stab at that until I see an actual structural change, as in going from lower highs and lower lows to at least now higher highs and higher lows. At this moment, I'm going to trade with the trend. So I think there is still a bit more pain to the downside, but obviously I'm not going to be married to that position. As soon as I see strength in the market, if I see enough strength, I'm more than happy to flip back to the other side. Of course, these are my own thoughts and opinions, and I would love to hear from you in a comment below. Are you buying this dip right now, the classic BTFD, or do you think that the markets still have a little bit more pain to the downside in store for all of us? Like I said, I would love to hear from you in a comment below. That's what I have for you today. I appreciate all the good vibes. I'll catch you in the next one. Peace.